As more investors put their money in renewable energy, the sector still faces significant challenges. Today, we will analyze the challenges and check if banks are hesitant to invest in renewable energy despite the urgent push for sustainability.
Clean energy infrastructure, we've seen those investments increase 70% from what it was before.
And on day one of the Trump administration, I will terminate Kamala's insane electric vehicle mandate, and we will end the Green New Scam once and for all.
One of the challenges, though, for banks is that we are a very heavily regulated industry as well. So we need to hold capital as a reserve against risky investments. And for some renewable energy technologies, we're still learning about them as well.
So we have first the technological change, which can be a hindrance if it's not clear in which direction to go. And just let me highlight the question of the storage, right? Then you have the individual market dynamics and government policy. And the risk around technological change isn't just that an emerging technology won't work or will never be economic to use. Technology used in existing investments can, in this context, also become out of date or redundant, reducing the value of the investment.
Let's not forget that another major challenge today is that right now, the US government is adding new tariffs on clean energy equipment like solar panels from China. This makes it more expensive for companies to build green projects.
The word tariff is my favorite word in the dictionary. You know, we were the richest relatively from, think of this, from 1870 to 1913. That was our richest because we collected tariffs from foreign countries.
Another key consideration when discussing investments is the comparison between renewable energy and fossil fuel projects.
While renewable energy is decentralized and can have a higher degree of resilience in comparison to fossil fuel infrastructure, this is more centralized. It's on the other side, it's a more complex system, but in the end, it produces at its marginal cost, which is really a competitive advantage. Now coming to the question of fossil fuel investment. And fossil fuel investment can suffer from similar risk, like renewable energy. However, the fossil fuel industry and producers, in my point of view, tend to be more established and market is hence more predictable, although there is a risk from environmental legislation, which is still in many areas of this world in place.
Another question many ask is about the payback periods for renewable energy projects. Are they longer than fossil fuel investments?
I'd say payback periods, again, varies from technology to technology, but I don't think that's an impediment to financing. I think some of the challenges are less about the payback periods because they have increased and got faster and faster, definitely with new technologies. So as I mentioned earlier around battery capacity and storage, that investment has really become more rapid. I think since 2022 as well, the payback periods for solar and wind and hydro, again, has really become more rapid as well. So I don't think it's so much of a differentiating factor anymore as well. There's also been a decline in costs as well per kilowatt hour as well. So solar PV costs in 2023 were about 56% lower than fossil fuel and nuclear options as well. So we're seeing that cost curve go down, that payback period really improve in renewable energy as well.
Yeah, in fact, the payback from some renewable energy projects like solar installation can be shorter than for oil fields or coal mines. An example could be, I don't know whether you know it, but an example could be the Butler Solar Park in Rajasthan, so in India, one of the biggest solar parks in the world, which has outcompeted new coal power plants in India. But some renewable energy investments, for example, in emerging technologies, will have longer periods. So also here it depends on the maturity of the technology. And longer term investments in all sectors intrinsically carry more risk, as banks find it more difficult to predict what will happen further in the future, and hence judge the risk around the finance they are extending. Banks may therefore be less willing, in my point of view, to lend, or the cost of finance will be higher as well.
So, are certain renewable technologies more financially viable than others? Let's explore this.
I think they're all becoming really viable. I think solar has really become a proven technology, has really won that race as well. But I think different markets require different renewable energy solutions as well. If you're selling a solar PV plant in Europe, and definitely Northern Europe, it might be a little bit more challenging, but we are seeing those scale up as well. We're also seeing, say, for example, in Northern Europe, rather than solar take off, wind and offshore wind taking off. So I think there's a geographical consideration with renewable energy as well that's now being taken into those net zero pathways at a national level. But I would say solar is really the star of the show, has really kind of won over, and that the PV cost is coming down, the battery storage cost is coming down consistently.
Energy market volatility is another concern. How does this affect renewable energy compared to fossil fuels?
I think the volatility is more around supply chain issues for certain areas of the renewable energy market more than anything else. Now that affects fossil fuel markets as much as anything else as well. So I don't believe it is that much of a factor. We generally look at, what we're seeing now is REC purchases, renewable energy purchases, and IRECs going for longer tenures as well. And purchase power agreements now becoming a dominant force just to get rid of any price volatility. But we see the same as well in fossil fuel purchasing as well.
Energy investments are made on the basis of the average energy price over periods of this project. And investors expect a degree of ongoing price volatility as expectations around the link between energy supply and demand will change over time. This is true for both renewable and fossil fuel investments, although renewable may face additional short-term price volatility to supply intermittences. An example, too little sun or too little wind. Always remember that prices for different sources of energy are linked because they are to some degree substitutable. For example, if you think about within electrical grids. What may be more important for investors here in this context is therefore how this volatility is handled within the national pricing policy. And an example here, the price paid for renewable feeding into an electrical grid is a good example. So expectations for longer term relative price changes between energy sources may also be more important than short-term price volatility.
Despite the challenges, financing for renewable energy continues to increase year on year. Even with the tariffs, many banks and countries are still moving forward. But it's clear that these taxes are making some investors think twice, especially when the goal is to grow clean energy fast.
So in 2024, it's estimated that we hit $2 trillion in overall investment in renewable energy. In 2025, we're expecting that to increase by 6%. Now that again is being driven in East Asia by China, who are using renewable energy on scale, but also manufacturing on scale as well. Also in the UAE as well, we hit record numbers for renewable energy as well. We're also seeing, despite headwinds from the US as well, them continuing to invest from the IRA in renewable energy as well as in Northern Europe. So we see those numbers continue to increase. Now, I think one of the focus areas is now as much on generation as storage, but also network distribution as well, because traditional energy networks and distributions are really targeted toward fossil fuels, where now we're seeing more investments in smart grids as well.
So if you look at the landscape and if you look at, for instance, the International Energy Agency World Energy Outlook scenarios, The amounts currently committed are expected to rise by 50 to 80% by 2035, dependent on the scenario. And you already can see the results in the rising share of renewable energy in overall energy output as well. So renewable energy accounted for 32-ish% of the energy mix in 2024 versus 22% in 2014, so 10 years earlier.
In conclusion, while challenges remain, renewable energy is proving to be a rapidly growing investment sector. As new technologies emerge, costs continue to fall, and financing grows year on year. The future of renewable energy looks brighter than ever. For businesses and investors, now is the time to take part in the transition towards a sustainable future. I'm Farah Heiba. Thank you for watching, and I'll see you in the next one.